Welcome back to New Jersey Living and Lending. Eric here, Green Tree Mortgage, and I got Jen, Keller Williams, real estate agent, on the other side of the screen. So today we're going to talk about pre-approvals, what it feels like when you first enter the home search, what you should look for, etc.
Correct.
Yep. So Jen, somebody makes a phone call, says, I need a real estate agent, I'm calling Jen. They call you, say it was a referral from like a family friend or a prior client or whatever that is. What's the first conversation sound like? I mean, you've never met this person. This is brand new. You've never met them. They just said, hey, Joey or Shirley is going to call you this week.
So I talked to them. I introduced myself. I kind of go over who I am, that I budget. My main thing is a budget, and that I like to figure out their monthly budget over what they can afford. If it's like 500,000, 300,000, I want to know what their monthly budget is and what they're comfortable with per month. I go over what I look for in a home. I'm looking at major systems, the roof, major systems, mold, water intrusion, and I go through the house with them. And I also budget for the future if they're going to need a roof in 5 years. I go through all of that and how I work. Then I tell them about my team, which would be a mortgage person like you, and that we kind of have to figure out what they can afford because they're not really sure. A lot of people have no clue what they can afford in a house. They tell me their wants. Normally it's 4 bedrooms, 2 baths, garage, basement, everything in the world, but they don't really know what they can afford. So before we go out looking, I explain we're going to want to know what you can afford and that each town has majorly different taxes and what areas they're looking at. And each town has a different tax. So their payment, I go over that kind of how it's going to decrease and increase in different areas of the counties, towns, and we go through that. And then I say, I have a great lender, Eric Reber. We work as a team, and
I'm right here.
I kind of get their background.
Pick me.
And I explain that I'll call you first, and then I give you their background and what we discuss. And, some people want to be near their work. Some people work from home. Some people are first-time home buyers. I talk about the grant with them because there's the first-time home buyer grant. I explain I'm not the lender. Sometimes you're priced out of the grant, but I go over as much as I can with them and not overstep my boundaries because I'm not a mortgage rep. And then I call you, explain everything to you, and then I tell them I'm going to introduce you via text and put us all on a group text. And that's when you come into the picture and I say, we're going to be a team and we're always going to talk. And, the great thing about us is we're not going to waste people's time. We're not going to go out and look at homes that they can't afford. We're going to run numbers ahead of time. You and I know the market, and we know the homes that are going to go for $30,000, $50,000 above sales price, or they're going to sit. Most likely we do. And we're going to kind of figure out their monthly payment before we even go out to see if we should go out and bother to look at a house, because it's everybody's time. It's the client's time, and everyone's busy. So they don't want to be looking at 10 houses when 5 of them aren't in their budget. And I also, before we go out, I vet the house. If there's issues, if there's easements, if there's, structural issues, I look at the seller's disclosure. I look at if there's a flood zone. And before we go out, I look at that and I talk to you because we're a team.
Yeah. One of the things you said before was about, what type of house are they looking for? And you mentioned like 2 bedroom, 6 bedrooms, 4 bath, and I make $40,000 a year. So
that does happen a lot.
Yeah. But now once we do pre-qualify them though, and you now have that good pre-qualification letter in your hand and you've got that, say they are pre-qualified for a $500,000 house, depending on taxes, of course, like you mentioned before, taxes are different. So a $500,000 house in Medford could be totally different than Berlin. Could be half the taxes, which means maybe you can go $700,000 in Berlin. And those are the conversations you want to have with the buyers. Now, at the same time, you triggered one thing. So Say they wanted to bid on a house that was listed 3 days ago. Say the house they're asking $499 for the house. You kind of looked in the area, sort of did like a certified market analysis, and you're kind of like, that's really high. You would normally call me and say, hey, do you know anybody that might be able to tell me if this thing would actually appraise for it? And we have resources, yes, and we have resources that we can use to be very confident whether an appraised value will come in or not. Only because of the experience and relationships I have, the experience and relationships that you have, Jen, that will help before you even put a bid in, because the worst thing I can think of is that you win a bid after maybe a battle with a couple of other buyers. You get the house, you're super excited, you're already planning on what you're doing with the dining room and living room. Next thing you know, the appraisal comes in $100,000 short. And that kills the whole deal because you only had 5%. We get ahead of all that.
We do. And then a lot of times, if there's multiple bids, the listing agent will want you to waive the appraisal.
Appraisal gap.
Well, you and I both discussed that when we're putting in offers. And I'll call you before I even answer the listing agent on that.
So talk about appraisal gap. There's a part in the contract, right, that if the appraisal doesn't come in at sale price, then in a standard contract, then they can be renegotiated, right? The sale price.
It can be renegotiated, and you can put in your offer that you're waiving the gap completely, or I like to put a limit on it that will waive up to 10,000 or up to 20,000 to kind of give my clients a comfort zone of how much they would have to waive, and so that they know that, wow, okay, the worst case scenario is $20,000.
So let's talk about the fundamentals of why we would do something like that, right? So the contract, standard contract always has, if it doesn't, the appraised value comes in less if you're applying for a mortgage, and it comes in less than what the house is sold for. The difference that is, say if it comes in at $450 and your sale price is $500,000, the buyer would have to find $50,000 more in cash in order to put down, in order to keep the same terms of the mortgage and even the same payment. So that's another $50,000. Now, what you were mentioning was that we'll waive the appraisal gap. What does the appraisal gap do for the buyer to the seller?
It's guaranteeing that we're going to give them the sales price that we offered.
And it also gives them an advantage to somebody else who didn't bid and waive the appraisal gap. So up until recently, it definitely has been a seller's market. Buyers were foaming at the mouth trying to get all the same house, and they're bidding well over asking price. And in a lot of cases in the past, up until recently, I think it's starting to change a little bit. You might agree with me that appraisal gaps were almost normal, that we'd waive the appraisal on pretty much anything.
You had to have an appraisal gap. The last couple of years, it is changing. There's only certain areas and homes that we're having to use an appraisal gap. Other areas, you're not even talking about it, in homes that are sitting. And then you're getting homes under sales price in certain places. So it's very compartmentalized, and it just depends. So I won't even put an offer in until I look and analyze all of that, and I speak to the listing agent.
Now, if you were a buyer today versus a buyer a year and a half ago, are you in a better spot today buying a home, or were you in a better spot a year and a half to 2 years ago, and why?
I think you're in a better spot now because there's definitely homes staying on the market much longer. Days on market are higher. Before things were flying off the market, even before they hit the market, people were actually putting bids on homes before they even saw them. So above sales price. So now things are sitting for weeks. There's price reductions, and you're able to get things for below sales price.
Yeah, so now you're able to actually negotiate, and you're not, a mile long line saying, take my bid, versus all the other buyers that already submitted theirs. And, by law, you're not allowed to know what the other bids are. So you're just hoping for the best, I like that the market's starting to correct itself. I really do.
Same.
So you would probably say if you were a buyer 2 years ago and got frustrated and got out of it, maybe it's time to start putting your toe in the water again now, right?
I would put my toe in the water.
Yeah, yes. Right?
Definitely. And I always say holidays are the best time to come out because everyone kind of slows down. I always told my buyers this, and we got great deals because everyone's doing the holidays and we're out there getting the houses.
That's huge. That's actually that's a very good point that you make because I didn't even think of that. So you're talking about the holidays as far as like in between Thanksgiving and Christmas
Yep, and New Year's, and
and New
I'm
Year's?
I'm willing and ready to go. So that's
Yeah,
when I was
that's for
getting
sure.
great deals.
Yeah, that's right. Because even people in the professional in the business, they take breaks too, and they usually take breaks in the holidays.
They do.
You know, so yeah, when the competition is lower is when you want to go out there and get the best deal you can. And now that I think about it, yeah, that would be a
It's
really
a
good
it's a
strategy.
great strategy.
Now knowing all of the things that we just talked about, now the new buyer comes in, calls you, you've already had that conversation, you went over all your questionnaire with them on, what they're looking to do, what they think their budget might be. We have that phone call to where you pass over either a text message or a call to me, and you include the buyer on it saying, hey, meet Mr. Smith and Mrs. Smith. They're looking for a 4-bedroom, 2.5 bath in Marlton. Here's the approximate taxes on what they should be pre-approved with. Clearly, that might move if they don't find a house in that realm. And then what I'll wind up doing is having that same conversation. Maybe you and I get on the phone together with the buyer and say, okay, here's going to be the next steps. We're going to send you out a link. You're going to, on your own time, you're going to be able to fill out and answer all these questions, which will fill out a loan application for us. We run the credit and we go from there. Now, Jen, pre-approvals versus pre-qualifications, right? So Green Tree is very, very well known in the South Jersey area. So most agents that see our pre-approval tend to say, okay, they're legit, they're good. But at the same time, if I had a phone call with a client or a prospect, we'll say, that didn't find a house yet that wants to get pre-approved and said, I've had 4 jobs in the last 2 years. I've took a couple of months off in between that, but I make $100,000 a year. And sometimes it's W-2. I have some overtime too, and I might get a bonus or two. I didn't get one last year, but I think I'm supposed to get one this year. I'm going to ask for income documents. Correct. I'm going to ask for income documents even if you were W-2 to the same job for the last 4 years. I'm going to ask for that, not for the simple fact that I'm forcing people to do it, but I truly feel that if we can get a full pre-approval done, it'll make them such stronger buyers. And then in the end, when they do find that house, we know we're not wasting their time and they're not wasting yours.
Everyone, what the difference is?
Between a pre-qualification and a pre-approval? I don't know what a pre-qualification is because I really don't do them. So, and that was definitely sarcasm. Pre-qualification is I have a phone call with you. You tell me how much you make, you tell me how much money in the bank. Through the phone, I high-five you, ask you if I could pull credit. I'll pull credit, maybe one repository, and I'll say, you know what? Your debt matches what you tell me what you make, and you tell me you have $100,000 in the bank. So great, go shop, and I'm going to go send over Jen.
That's a soft pull. That's a soft pull. It doesn't hurt your credit.
Correct. And okay, Jen, they told me that they made this. They told me they had this much money in the bank, and I think they're good for about $500K. Their credit score is 740. Go get them. Jen's pushback would be, you didn't see any of their income documentation?
Yeah.
You didn't see the bank statement showing that they had $100,000 in the bank? How do I know that they have the money? Bottom line, this is the biggest purchase you're going to make in your life in 99% of the cases, right? Unless somebody would rather buy $1 million yacht. Who knows? But since this transaction is so big, you want to dot your I's and cross your T's at the earliest phase of the game. By law, I can't not do a pre-qualification if you refuse to give me the documentations. I have to do that by what you say. But as soon as I pass that off to any real estate agent, whether it be Jen, whether it be anybody else that I work with, the bottom line is that they're probably not going to take it until I get the income documentation because they don't want to waste their time. And if the buyer doesn't want to take the work into just sending me W-2s and pay stubs, then why should the realtor do the work on their end, right? So I think have your stuff ready, have your income documents ready, have your assets ready, have generally what you like to see. Go on any of your local online house hunt things and kind of poke around at houses just to see what area you might like, what type of house you might like. That's when you give Jen a call.
And it is a disservice to yourself because you really don't know what you can afford. So
True.
It's a waste of time for yourself. True. Right.
And there's very, very safe ways to transfer that information to the mortgage company. So it's not like you're going to put it out there and afraid that somebody's going to take your identity. knowing that the social security numbers on things, there's very, very secure ways to do that now. There have been so many times in the last 15 years where mortgage companies, the industry have been burnt to where we fixed it. We were absolutely able to do it. Completely secure online uploads, which is a link that only goes to you and it only goes to me. So in that
It's
case,
actually safer than me handing you documents.
for sure, it is.
Definitely.
Yep.
Yes.
God forbid it's lost or somebody behind your shoulder takes a picture of it. That's happened. It has. They're everywhere, these people. I wish they'd go away, but they are everywhere.
They're everywhere.
For sure. All right. So we have the pre-qualification versus the pre-approval. In the next step of the process, once that's done, I hand that over to you. I say, Jen, have at it. Go spend the weekend with them. Let's get them a house, right?
But I still call you and we double
yeah.
check numbers and taxes and HOA and everything else, and we make sure it's a fit.
Yeah,
and
that's
I make
a great...
sure the HOA, right?
Yeah, that's a good point, right? So while you're out looking at homes, or maybe before you even look at the homes, you pull up, we're going to go see 5 houses. I'm going to send them over to you, Eric. Is there anything with these houses that might be an issue or knock them out of qualification, right?
I do. And I told you, I go through, some want cash only. I have a big list of things because if they're FHA buyers and they want a condo or a townhome, sometimes those communities won't take FHA buyers. So we can't see that. I knock them out if it's a foreclosure and they just want cash only. So I go through everything with a fine-tooth comb because I don't want to disappoint someone and be like, oh, I didn't look at it, and they don't take FHA buyers.
That's
And
a good point.
a lot of new realtors, and I'm not putting them down, they don't know to go through things like that. And then they'll call Eric and they'll say, hey, can we, and then he'll be like, hey, this community doesn't take FHA.
Right. And there are times where I can get a spot approval on a property, but it just adds a little bit of time to the process, right? We have a condominium department at Green Tree that does a very good job at clearing things and approving them in a fast amount of time. But there are metrics that you have to meet in a community in order to be approved FHA. You cannot have a higher investor concentration than a certain number. The last time I checked, it was 10% or higher. Investment concentration means how many of those condos are rented out.
Correct.
That someone owns it and then rents it to a tenant. That's an investor concentration number. If it's higher than 10%, there could be an issue there. Then FHA wouldn't approve it. And they would say, hey, there's too many rentals in there. This is more of a rental community. I don't want to lend money to a primary residence person that may just in a couple of months flip it out and rent it out to others. So that's an important thing to talk about for sure.
There's things like there's been lawsuits that I know of in places. There's been fires. There's a lot of things I know that you'll want to know. I'll give you that information and you make your decision. But,
right. Yeah.
Yeah.
Do you have any real world examples of buyers? Now we keep names anonymous. We always do on this channel.
We do.
Any situations that you've been in the past, and I know that you and I have been through a few ourselves that have been, some crazy situations, right?
Yeah.
But talk about finding the home and getting cold feet.
Yes.
Talk about that.
Well, I just saw a post yesterday where someone put, people are using AI, and this is becoming a problem where they're putting in questions and AI is backing them out of the house because
wow,
it's true.
They
think
do?
They are putting in like the home inspection or question. They don't even know how to word the questions, but they're acting as if they're a realtor now through AI or a mortgage rep, but they don't really know how to word the questions, and AI is telling them to back out of the transaction, and they're getting cold feet from AI.
Really?
Yes, it's a huge
Oh my God.
problem. I'm not kidding you.
So AI is now getting in the way?
Yes.
So
it's
first
horrifying.
First we had Realtor.com and Zillow get in my way. Now I've got
we're
the
having
freaking
AI.
Now I got the freaking AI.
Mm-hmm.
And what are you going to do with AI? I can't do anything with that.
And AI is wrong. They're wrong. They don't have all the variables. And this guy posted that he and I felt for him because I've had it happen right before closing, and it's AI. And they have no idea what the deal is, all the variables, what's going on. what the market is, what the neighborhood is. And AI is not going to be able to tell you all this.
Using AI now? All right, so I'm a buyer. I go online, I see a couple of houses. You show me the house, and you're like, I'm like, I'm in. Let's negotiate this. Let's see if we can get it. And then I come home, and my wife and I, or whoever,
No, we get it. And then all of a sudden,
you're under contract.
Yes, and then we go through everything, and then they decide that AI doesn't think it's a good idea.
Oh my God! And then what?
Like,
you're in the middle of the contract.
Yes. This is happening now.
I'm not even sure what to say to that.
I don't.
So instead of calling it Uncle John or Aunt Sue.
So it's like having, family at an inspection that is an inspector. Now we have AI at the inspection. I'm not kidding.
How many times have you and I been through transactions where there was a younger couple or a younger single person walking through with the inspector?
Yes.
Pulling apart, like, oh, this is going to have to go. Oh, you see this crack in the sheetrock? Oh, that's structural. We're going to have that looked at.
Yes.
And this is a guy or a girl or whoever it may be that's walking through, that's just trying to be a good family member and completely getting in the way.
Or like the father who says, I'm like a home inspector. And it's like, okay, yes.
I've owned a house for 30 years.
AI, the home inspector. So there you go.
Oh my God. I can't believe that.
That's what we have now.
I'm not going to lie. I use AI. I use it a lot.
I use it, but I know that it's not a doctor. I know it's not a lawyer.
No. Oh my God. That's hysterical.
I use it as my therapist.
Not going to lie. I've done that.
I'm like, what do I do now? But I'm not for real with it.
I can only imagine if I saw your thread of what you're putting through ChatGPT or whatever.
I put
AI
everything in there. I do like recipe, everything. It's my life. But I would not back out of contracts with AI.
AI's in the way of real estate now. I get it. What other things changed other than in the AI world? Right? So everything. AI is now plugged into everything, right? So, I mean, when you have pay stubs, W-2s, all that stuff, now that's all private personal information that we don't put through AI. We don't want the interwebs to have anything to do with that.
No.
But if you had like a certain calculation that you had to make that was much more complicated or very unique maybe from what you normally do, AI is the way to go because it's going to tell you pretty much what it is when it comes to math and things like that. But when it comes to like real world decision making, AI is not ready for that.
It's not. And it supposedly tells you what you want to hear when you talk to it, honestly. They do say that.
It pumps up your tires a little bit, huh?
It does.
So it is like one of the psychologists through a phone.
It is.
Maybe I'll use that more.
It is.
Oh my gosh. Yeah, well, there you go. All right, so we talked about pre-approval, we talked about pre-qual, we talked about what you talk through with the buyers on what they're preparing for. Now, you gave them all the information, we fill out the pre-qual, you're taking them house hunting, you were talking about sending back to me properties, maybe with an HOA, possibly have to get them approved if they're a condo complex. After they find the house, what does that process look like? And they say, okay, we got one. We want to put a bid in on it. Let's talk about that.
So I normally run comp. I try to look at first the last 3 to 6 months in closings, and then I look at what's active. I just do look at that. But also I look at within a half mile. If there isn't enough inventory, I go to a mile, but I first look at a half mile, and I just see what things have closed at, the price range, what the homes look like condition wise, and then I call the realtor and I see if there's offers. I look on days on market, if it's been a day, if it's been 30 days, 60 days, price reductions, and I kind of go from there on what I think I would offer. If it's a hot house where there's 10 offers, I call you. And then we run numbers with you also, because I want to know what the different payments are. Because a lot of people don't realize if the house is going to appraise, a $10,000 bump up isn't that much in payment. And then if it's been on market, we can get money from the seller sometimes. There's so many different things we can do. So it just depends. And also, the buyers are all different. Some people have a lot of cash, some people don't have cash. So we may need cash to close. So everything's different and it depends on the buyer.
Yeah, so you hit a good point there, right? There's so many ways to skin a cat on this.
Yes.
And it's your job and my job to figure out what that best offer looks like. It might not be just the highest bid. It might be the way the bid is structured, right? So if this is a hot house, to your point, it's where there's 5 to 10 people bidding on it and it's going to go quick, right? Do we then adjust that pre-approval? Well, let's go back. Say they have $100,000 in the bank, but they really don't want to use it all for the down payment. They want to put 5% down to be done. And say it's 15 grand, whatever that is, or 20 grand, we'll say, is the total down payment they want to use. And they want to keep 80 in the bank because they want to kind of put more money into the house.
Right.
So now we have a 95% loan to value pre-approval showing 5% down and $500,000 house, how whatever works. We can then adjust that to say, you know what, let's throw a little bit more money down on the pre-approval and on the offer saying you're put 20% down. That shows that
they're stronger.
Yep, they're stronger because they have more cash to put down, number one. Number two, it's a lower loan amount. And number three, you can put a deposit down, or they know that you're good for it financially for the deposit.
So we can raise the EMD.
Yep.
Which is the earnest money deposit.
Yep. But the big thing I think that we strategize, I think probably better than most, is, to your point, seller concessions,
There's so many things we can do.
Tons of different moves that we can make. There's so many ways.
Some sellers want to move in 2 months. So we do the close date in 2 months. Some sellers want to move right away. And if the buyer is non-contingent, we do a fast closing. You and I did a closing in 9 days.
Yeah.
If they want to rent back, well, we'll get an attorney involved at that point. I'll make sure that my buyers have an attorney to write the lease back, but then the sellers can close and then rent back from the buyer. We can make so many different terms, but my main call is to the agent to find out, what do the sellers need? A fast closing, a clean closing, an extended closing? What can we do for them? Do they need the cash to buy the next house? So do they need to close now and then rent back so they can find a house? Do they have a house? What do we need to do? Are they moving out of state? What can we do to make this an easy deal for them? And that's basically what I do.
Yeah, I think that's big. Calling the seller agent and just saying, hey, what's it going to take? Would normally know the agent or somebody the agent knows.
Same.
Right? So since we know most of the people that we're kind of working with, it's so much easier of a transaction, so much easier to make things work, and that's what really is the key point of going local and experienced. And I've been doing this since I was a kid, right? You've been doing this quite some time and you've done a ton of transactions in the time you've been doing it. So
if it's an estate, do you want to leave the stuff there? Maybe my buyers won't mind leaving the stuff there. That's a cherry on top because maybe no one else offered that. There's so many things to think outside the box to make this happen and make you go on top.
Yeah. So I think we covered a lot. What would be one thing you would tell the people who watch this episode to do next if they were interested in hearing more?
So I always tell people, even if you're going to buy in 5 years, 10 years, you're not bothering me. So call me with questions. Because they're always like, well, I just, I might not be doing this for another year or 3 years or 5 years, but I don't care. I love to help people. I love to talk to them. This is like what I enjoy. It's not work for me. So I enjoy talking to people. So call me. Call Eric. He's the same way. If you have mortgage questions, finance questions. Also, if you think you're not in the position to purchase, you probably are, or you're a couple steps away from it, and we can help you. That's our goal. I have had people come to rent, and then I talk to them, and they can buy, and then they went out and purchased. So just call us. We're here to help. And if you're not buying, we don't care. Eventually, we'll get you on, they call it a ladder. You'll get on the first step of the ladder to buy, or you'll buy. And we're here to help you.
Yeah, how about the whole, my credit's crap. I've been working for a couple of years. I'm trying to dig myself out of a credit hole. I don't know when I'm going to be qualified, so I'm just going to keep doing what I do and try to reestablish credit. What I would say to people like that is call me anyway.
There's always a way. And there's other things like co-signers.
Yeah, if the immediate want is to buy a house right now, sure, we have co-signers, we have that. But I think most important is that we work with people that devise a paved game plan that say if you execute 1, 2, and 3 within the next 3, 6, 9, 12 months, you're buying a house.
I agree.
So if we can give them a very specific path to travel rather than just saying, I don't know, my credit's crap, I'm trying my best to knock down my bills. And you don't know as much as we do about the credit reporting systems. You don't know as much as we do about all of the requirements to attain a mortgage. It's probably in many cases a lot less than you think we need in order to get a mortgage. So I think the first step, even if your credit hurt, give me a call. I'll help walk you through it. I'll make you a buyer over time, and then Jen will pick it up from there.
And we'll find something where I'll get you a house. Believe me, I'll find it.
It's true.
We'll find you a house. And also, there's the first time home buyer grant to get, if you don't have cash on hand. That's why it's here. It's a grant. So
that's right. Yeah. And I think that might be our next episode. We can talk all about the grant, the details behind the grant, and how it's implemented in the negotiations to buy a home. A lot of people think, hey, if I have a pre-approval saying it's zero money down and we're using this second mortgage grant, then, I'm just going to get thrown in the trash. But there's ways around that. There's absolute ways around that.
Agreed.
To make you just as strong of a buyer as anybody else out there. And especially to your point, Jen, earlier, the market's changing now. It's more of a buyer's market. We're going to see more of the first-time home buyer grants. So I think you should tune into the next episode. But
we'll do it.
I think we should do it.